Hey, folks, welcome to InTheMoneyStocks.com's intraday analysis video, brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, folks, into the action we go today on this Tuesday, May 13th, 2014. It's about 2:45 p.m. Eastern Time. That means just over an hour left in the trading day. Markets are right around the flat line on extremely light volume. And again, look at the action. I think it's very interesting to look at the action and the difference from yesterday. Number one, yesterday we had that early morning gap up and push higher. The rest of the day we floated neutral to higher into the close. Today we did also have a smaller gap up, an initial push up, but the difference today, we faded right back down to the flat line and have gone sideways the rest of the day. And again, the volume today literally on pace probably for the lightest trading day of the year, just dead. Now, you might ask, well, why is it so quiet out there? And the answer is pretty simple. There's just not any earth-shattering news. You have nothing new from the Federal Reserve. There are no earnings announcements of magnitude. There's no new news out of the Russia-Ukraine conflict. There's nothing from China right now. Everything seems very status quo. We got some retail sales numbers this morning, which were kind of right on the neutral side around expectations. There's nothing driving the market. If you look at the moves over the last 3 months, it's been, the Federal Reserve cutting QE back and then making a statement. It's been Chinese economic data. It's been the Russia-Ukraine conflict. And we don't have any of that really affecting the markets today. So the markets, again, are just in sideways zone, coming off of a move higher yesterday and into this morning. Could be the beginnings of bullish consolidation, but it is far too early to know that. Now, yesterday we did close above a key level, which again to me was a short-term breakout. All right, I want to make that clear. Short-term is the key term there, and that means it's only going to last for a few days. So again, notice this upsloping trend line right here. If I zoom out on the chart, let me just zoom out on the chart to show you guys. See, it crosses through this line, and if I zoom back just a little bit, you can see it crosses right through this pivot low. So pivot low, pivot low, pivot low. We got below it late last week and kind of early this week we were hovering, or I shouldn't say early this week, late last week, mid last week. But notice how you closed below it here, you pierced it, reversed back down, closed below it again. Finally, on yesterday's move up, you got back above it. In addition, you also got above this trend line here. So as long as we hold above both of these, then the market should be looked at it in a positive light. All right, not a hugely positive light as it's a short-term move, but you could see a little bit follow-on upside in the coming days, I think. Okay, now the one thing I'll be watching, so you see this upsloping trend line and this one right here, they're both upsloping. They're coming together at a point. They're going to merge together. If price gets below them, go into a neutral stance on the market. Not negative, just neutral. If the market starts to break down below them and comes down and takes out this recent low here, this pivot low, then you would go into a neutral bias. That would be a very bearish move on the markets if we came down and closed below that level especially. So little things I want you guys to be paying attention to. Right now, you haven't made a lower low, so you got to be positive. In fact, you made a higher high right here. You're above both these trend lines. You're above all three moving averages. That's a positive on the market any way you cut it. Okay? All right, so that's what we have going on there on the spiders. And again, volume, look at this, 48 million shares traded on the spiders today as we approach the 3 p.m. Eastern time frame. A couple other things to go over today. Again, I want to take a look at a couple stocks. So yesterday we saw a lot of the beaten down high beta stocks like Twitter getting a bid, but take a look at Twitter today. All right, Twitter today down 42 cents. So you're not seeing a run for safety again of epic proportions like we've seen in a lot of these stocks, but it's interesting that the run into these stocks has kind of already stalled out. And it's interesting because Chevron, which was very weak yesterday in a rally day, today up 50 cents, up almost around 4/10 of 1%. So you're almost seeing investors, they jumped in Twitter around 30 bucks. I gave you guys that key level. It jumped to about 33 and change. Now it's stalling out. All right, we talked about Chevron money flow yesterday coming out of Chevron, and it was very weak. Today it's going back in. It's almost a switcheroo again, and that's actually concerning because one thing you have to pay attention to is where money flow is going. As long as money flow is going into the safe stocks, that should be a concern for every investor. All right, that means people are going into safety because the big money thinks that something bad is coming down the pipeline. And again, something we just want to pay attention to in the coming days. Do we go back to major buys on Twitter and Chevron getting a little bit weaker? How does this market really react in that sense? And I think you can gauge the future of the market by viewing that over the next few days and the short term future, next couple days out. All right, so just something to keep an eye on there, folks, as we continue to look through it. If you look at another stock that's a safe play here, Hewlett Packard, another nice day on Hewlett Packard. Hewlett Packard had a bullish pattern on the daily chart. It looks like it's playing out into double top. If we flip over to the daily chart, you can see here. Here's a little bit of inside bar action off of this up move, little pop. Probably goes right here. That would be your short-term target on it. And again, I think it's going to stall out at that point. Eventually, you're going to come down, take out this 50, and then it'll collapse down. But that'll be in the next bigger sell-off because you have different modes of this market, guys. Right now, when the markets are hovering around their highs, and you're having these dips of like 3%, 4% back up to the highs, and down 3 or 4% back up to the highs, what you're going to be seeing is a rotation of capital. So capital's not 100% leaving the market. They're not leaving the stock market. What you're seeing is a rotation where it goes from high risk plays into low risk plays. Now, when things get really ugly like we had in 2008 and 2009, early 2009, that was where money just ran away from everything. All right, it was all about being in cash. Right now, people, I saw interesting headlines out there about Bank of America saying, "Oh, people are moving into cash again." That's nonsense. They're not. They're not yet doing that. What they're doing is they're just rotating into safer areas like Chevron's, Hewlett Packard's, dividend-paying stocks that have been around forever, kind of thing. And that's what you're seeing. So kind of just keep that in mind. I want people to have a clear picture on that. All right, couple other things to go over here. How's Baidu doing today? Baidu, look at this. So here's another tech play that got hammered, a higher beta play, higher risk play, and it's coming back in today. So I mean, it had a great day yesterday, but it's back down $4 today. How's LinkedIn doing? LNKD. Let me take a look. Yeah, I mean, look at LinkedIn down $4. So to me, I mean, listen, right now I'm a short-term bull just because we're above those levels as I showed on the spiders. I don't think it's going to last very long, but maybe it'll last even less than I thought it would. And you have to looking at these stocks that have been beaten down. I mean, if this is the best bounce they can get, if that's it, remember, I mean, LinkedIn's down from $250, guys. 250 to 140 was the low, actually in the 130s. If the best it can do is bounce back to 250, that's not even a Fibonacci retrace. So now I'm not saying that we're not going to bounce back up off of this down day. I'm just saying what we need to do is pay attention to the price action in the next few days. So that's some little interesting stuff here. So anyways, things that I want you guys to be tracking and keeping an eye on. I think it's very important to do so. If we take a look at JP Morgan, JPM, the financials have been very weak. I talked about this last week. Why are the financials weak? Because you have situations where housing is not doing too well. That's where banks make a lot of money. Interest rates are falling or staying neutral around the 2.6, 2.65 range on the 10-year. That's not a good sign. Interest rates going up would be good for banks. So banks are going to, as far as I'm concerned, with new regulations coming out, they're in purgatory right now. They're going to go sideways to lower, especially when the market starts selling again. These things will lead the market lower, no doubt about it. The fact that they're not rallying more either is a concern in the longer term. I still think the markets have to be respected with the spiders above the key level. If we flip back to the intraday spiders here and just go into that. All right, so just the fact that you're above this area right here, you're still above this low, you've made a higher high, and you can see it again. So, I mean, if we just look at the charts here, so here's your, let's go back a little bit more. Here was I showed you this yesterday, but lower, low, higher low, and then we made a little switcheroo. We made a lower low where the market could have fallen. We got below this trend line, and then we came up, made a higher low, and again a higher high here as well. If I put this trend line right here, you can see the higher high right there. So, I mean, the market was able to fight off this little negativity here and start to move back up, and that's why you got to respect it right now. But there are a lot of concerning signals out there, and the more I'm seeing it today, the more, even though I'm short-term bullish until we see a switch and a move below this area, I have no problem going into a bearish mode once we see a little bit of selling here based on what I'm seeing in the financials in some of these higher beta stocks. All right, people are still unloading, and guess who's unloading? I mean, do you think because mom and pop are selling 50 shares of LinkedIn that it's down $4 today? Nope. All right, institutions are unloading those. And the fact is, if they're not waiting for a bigger bounce to unload, it makes me a little nervous about this market going forward. Anyways, I digress. Let's get going here, folks. Come join us here at InTheMoneyStocks.com. Take the 7-day free trial to the Research Center. Let's make some money. Lots of money to be made if you know where this market's going, if you can read it properly, and we will help you do that and give you trade alerts along with that. Take care.